Good day, management, investor, and all participants online. I would like to welcome you all to Thai Union Group third quarter year 2017 result announcement. Today, the executives who are joining us today are Mr. York Irie, Thai Union Group CFO, Mr. Ludovic Garnier, Head of Group Accounting and Controlling, and myself, Bess Vayanon, Investor Relations Manager. This event will comprise of approximately 30 minutes of presentation session, and toward the end of the presentation, we'll provide a Q&A session approximately half an hour. Please do note that this conference call session will be conducted in English. For any participant who have any inquiry for our management, please type in the question box on the right and click send. We will raise them during the Q&A session post the presentation. Now, I would like to invite Mr. York Irie, Thai Union Group CFO, to start the briefing. Thank you very much.
Yeah, good evening here in Asia. Good morning in the United States. And have a good day in Europe. Today, I will try to be a little bit faster and not talk so much. I've caught a sore throat last week, and I'm still a little bit affected. You'll hear that in my deeper than usual voice. Let me jump right into the key highlights for Q3 2017. We have reached a new height in our revenue development. We have record sales in Q3 of 35 billion Thai baht. This is a record level, of course, driven by high tuna prices, high raw material prices, and also some volume increases year over year. Our gross margin, and you will have noted that from the documents and from our earnings release a little bit earlier today, remains under pressure. We have reached 13.2% gross margin, 4.7 billion gross profit. That is a change year over year of minus 5.6%. And we will talk throughout this presentation a lot about raw material and how raw material affects our profitability. However, at the same time, we've been able to continue our very strict cost control measures. We have reached now an underlying 9.1% SG&A. If we exclude two one-offs, the relocation in the US and a small restructuring charge that we had in our Ghana facility for downsizing production somewhat. So we are clearly below guidance of 10%. So we've basically reduced our run rate cost by 100 basis points during this year. Operating profit, 3.8%, certainly not where we want it to be, minus 30% to a year ago. Of course, this is the key weakness in our current period. And all of this, most of this is, of course, due to the high raw material pricing and our inability to push some of this cost increase down to customer. Now, the good news from a net profit perspective, our bottom line, the earnings of the company is 4.9%. So we are actually now for many quarters in a relatively good corridor between 4.5% and 5%, 1.737 billion Thai baht. And we've been able to achieve this despite the headwinds in terms of raw material costing, mainly from the continuing profit contribution from Red Lobster, prudent FX management that brought us, again, FX gains, and I'll talk a little bit about that later, and tax management and some one-time tax effects that we have been able to record in Q3, again coming from a tax election of Red Lobster in the US. I say this already up front. This one-time tax assessment in the US is something we have to review in Q4. We don't expect any revision, but we also need to see how the new tax code in the US is developing and what the impact could be on our financial statement. Now, for the 9 months, 17, net profit is up 6.1% to a year ago. We have record sales. Operating profit is down, gross profit is down, EBITDA more or less flat, net profit up 6.1%. We have now year-to-date 9 months 4.617 billion in net income. Our net debt to equity remains stable at 1.37. So you can see from this in Q2 we're a little bit below 1.37. So our cash flow, including the dividend payments that we made, is not helping us on debt repayment at this stage, but we already see some good signs on inventory reduction towards the end of the year. I'd like to show this long-term tracking chart, and there is one a little bit later that I'll focus on a little bit more. We've plotted the tuna raw material price into this chart, and then you can see a lot of correlations between gross margin reductions and the tuna price increase. What you can see here nicely, the net income remains in Q1, 2, 3, always in a relatively comparable range. Q4, I think all of us expect this, is likely going to contract somewhat out of seasonality. What you can also see on this chart in the line in blue is that we continue to have sequential growth year over year for the last 12 quarters. We are growing our business, and for Q3 17, if you would normalize this for currency effects, our growth is actually 2.4%. Now, before I go a little bit into more details, and I'll ask Ludo and Kun Best to help me on that later on, I'll share some recent developments. I don't think I need to go through awards and recognitions. We discussed already last quarter the conditional leniency that we have received from the Department of Justice. We see a lot of recognition we get for our sustainability activity, for sea change that we have implemented. Darian McBain is more and more recognized as a clear leader in the seafood industry to drive sustainability and human rights in our industries. Coming from China last week, this is actually where I caught my flu, I bring some update on a couple of you have asked what this deal with Alibaba is, and I've just brought some news from China. I've been to Shanghai reviewing our business there last week. Alibaba and Thai Union had signed a strategic partnership to bring products from North America into the Chinese market. In June 2017, we have signed a memorandum of understanding. We had an offline event at Igor, which is a super fresh goods operator, to help launch our King Oscar brand in Tmall Super. We have Tmall Super as an exclusive channel for King Oscar, online channel for King Oscar. In September, we received a supplier exclusivity agreement for live lobster in Alibaba's offline store, Hema. And it is really amazing to see these huge lobster tanks with Thai Union King Oscar lobster from Canada sold as live lobster for 99 RMB for a 400 to 450 gram live lobster. Really amazing, a lot of sales happening there, really encouraging. In October, We have been awarded 2 out of 4 exclusive seafood items in the Double 11 pre-sale. The 11th of November in China is the Singles Day and is announced by Alibaba's Tmall as one of the super shopping days in their online channel. So we can see our activities in China are slowly shaping up. I guess we'll end the year around $10 million in revenue. We have a team of 25 employees in our office in Shanghai and with sub-offices in some of the regions, some of the large cities. And we can really see what happened here in the last 12, 18 months. A real business was created that contributes to our top line, and that will very soon also be a bottom line contributor. Excuse me, based on our King Oscar branded business distribution. A second news, and you may not be surprised that we are actually executing on some of the announcements and some of the structural cost-saving measures that we had discussed and announced earlier. We have changed our European organizational setup in order to delayer our overall business structure. We have now built 3 business pillars, a supply chain organization that reports directly to Bangkok, a regional president, Paul Reenan, who is leading all commercial activities, that reports directly to the CEO, and the business services and financial support function and a legal counsel function that reports directly to myself, without any further layers, really taking out costs from the structure and contributing to our structural productivity measures that we implement in creating a one Thai Union management approach. DOJ, I don't need to comment on. We already talked about that. We've received a conditional leniency, which means we will not be prosecuted by the DOJ. We will not have to pay a criminal fine, and none of our employees will have to go to jail. I'd like to then jump into some of the financial results for Q3. Excuse me. And again, top line at record levels, 35.2 billion. At constant exchange rates, our sales would have increased 2.1% year over year. The gross profit margin shows continuous weakness. However, we have now 4 consecutive quarters of positive gross profit in our European salmon business. If you recall, a year ago, we lost about $16 million in profit in this business. We were targeting to break even on an operating profit level for this year. For some of the parts in that chilled salmon business in Europe, we have achieved that. However, overall, together with pre-investments in building the brand, we will still roll in a small operating loss. But from an operating perspective, we've been able to be now slightly positive for the last 4 quarters. I think that's already a good news. Strong cost control, a roughly 100 basis point savings compared to guidance. So I think we are here on a very good track, and unless gross margins will improve, we intend to stay on a very prudent SG&A level. Non-operating items support the net profit. I mentioned prudent FX management. We continue to have a strong FX performance, significant tax and non-controlling interest savings, and Red Lobster continues to contribute to our bottom line. We have this quarter how much is it, Quinvest? 28% or 25%? 28% EPS accretion from our investment in Red Lobster. So this turns out to be a solid contributor. Albeit, let's also be clear, mainly from tax savings and our preferred interest yield that we get on our convertible equity units. And this is the chart I wanted to show you. You see a little bit shaded in the background our long-term 12 quarters tracking. And we've put here into this as a dotted line the average tuna price in each of these quarters. And you can see that the tuna price is basically increasing from Q4 2015, which didn't have much effect yet until Q2. Q3 already slightly affected, and then with the pickup of the tuna cost up to 2,000 and beyond dollar in Q3, you see a gradual margin erosion and an effect on our business. So I think on the one hand, some of this cost increase has been pushed to customers, especially in private label, but in branded and in some of the private label businesses, we've not been able to fully push this out, and this is now causing some level of margin erosion. On this page 19 is just the details for each of the months. It's basically the same data. Now, one of the things, and I think I had mentioned it in Q2 already, we are here in Thailand on an accounting principle that has not implemented fully IFRS 9, which means there's no hedge accounting in place at this stage, so we are reporting FX gains and losses all below operating profit as FX result, independent on whether the FX result comes from trading business or from intercompany financing. What we've tried here on this page, we've tried to replicate or restate in terms of an estimate. So this is, please, not a pro forma statement. This is just an estimate. We've tried to restate how would this have looked over the last couple of quarters if we would have implemented hedge accounting. And what you can see, the reported gross profit margin in Q1 17, 13.8, 13.4, 13.2, gradually eroding. If we would have restated our financial statement according to hedge accounting, we would have actually had a relatively stable gross profit margin at 14 to 14.1%. And this is exactly where we would like to be next year. I hope we can get approval for the respective implementation of international hedge accounting standards in order to stabilize and normalize the gross margin. So for all of us who are really worried how the gross profit has dropped here over time, part of this is really a function of hedge accounting treatment. And if we would have restated this, or would be able to restate this, we would actually see over this year a relatively stable gross profit margin despite all the raw material price increases. You can hear my voice is getting a bit more raspy, so I'll probably move it over to Quinvest. Maybe you take it from here.
Okay, for the P&L summary and the financial performance, the third quarter year 2017 sales has grown by 0.4% year on year to the record of 35.2 billion baht. That's up about 2%, excluding the impact of foreign exchange rate gains. On the 9-year sales, 9-month sales, the sales will also grow by about 1 percentage point, about 0.8% year on year to about 101 billion Thai baht. As you can see on the next slide, we are still continue to, despite the tough environment, we are continuing to show a positive year-on-year sales growth over the last 3 to 4 years without failing. So this is a strong track record, and that's showing that the Thai Union Group has grown and will continue to grow into the future. In terms of the brand mix, as of the first 9 months of this year, the branded sales are still account for about 43% of the total sales. This is up from 41% for the full year 2016. Of course, the strong brand presence around the world continue to contribute and add up and prompt a strong growth and has contributed to our portfolio. Gross profit margin wise, third quarter year 2017 gross profit margin has been under pressure at 13.2%, and the gross profit in baht term at 4.6 and 4.65 billion Thai baht has been down 5% compared to the last year and pretty stable on compared to the last quarter. Of this figure, we continue to see that the high tuna raw material price continue to put the pressure on. And on top of that, pet care business gross profit margin has been also been under pressure due to the rising tuna raw material price. In terms of operating profit, has been heading in the same direction as the gross profit margin. The operating profit of 1.3 billion baht has been account for 29% year-on-year decline and 19% quarter-on-quarter decline. Although we have to highlight that due to the stringent cost control, the normalized SG&A to sales ratio are now sitting at 9.1%. Okay, and this is varies due to the strong cost control, while the reported is at 9.5. We're noting that there has been some one-off item in regarding to our operation during the quarter. For the 9 months, SG&A to sales ratio has been now down to about 9.8%, well within the full year target of 10%. In terms of net profit growth, the third quarter net profit continue to deliver a strong growth at 8.9% compared to last year, sitting at 1.7 billion Thai baht, and also up 23% on quarter. Even on a 9-month net profit has been reported at 4.6 billion Thai baht, up 6% year on year. These improvements are coming mostly from the stringent cost control, the prudent and careful FX and tax management approach, and lower minority interest expenses from the minority stake buyout that happened during last year. For the Red Lobster contribution, as Jörg has mentioned earlier, this quarter, in third quarter, the Red Lobster has been a big contributor and has contributed 28% EPS accretion to Thai Union Group net profit during the third quarter. While the big bulk of the contribution are still coming from the interest income on the other income line and the income tax credit that happened during the third quarter of this year. In terms of the debt, we are still having, after much of refinancing, we still have about 75% our long-term debt due even after year 2021. That secured the long-term financial position of the company very well. In terms of the return profile, we have started to see some increasing. The ROE has now improved to 15.6% as of the third quarter of this year. ROCE has shown to be stable at about 8.4% during the third quarter of this year. On the other hand, the net debt to equity has shown to be stable at 1.37 times, which is in line and stable from the period of the end year 2016. In terms of the raw material price, the tuna price has continued to show a significant increase during October. The tuna price has once again reached the recent high at 2,300 US dollars per ton. During the third quarter, the average tuna price was at 2,000 US dollars, which is per ton, which is 40% increase year on year and 14% quarter on quarter increase. While on the other hand, the shrimp price and salmon price has been more manageable, which has been showing a slight decline compared to last year. In terms of the segment breakdown, the ambient seafood, which comprise mostly of tuna, sardine, still account for the biggest part of our sales mix at 46%. Frozen and chilled seafood are contribute at 41%, and pet care and value added and the remaining account for the rest 13%. For the breakdown on the ambient seafood business, we continue to see the solid sale growth of 2.4%. That is on the basis that of the price adjustment mainly. The quantity sales has been stable, but the margin has continued to be stable at about 15-16% level, which has been shown some improvement compared to the second quarter of this year, despite, of course, the tuna price has continued to rise to its 48 month high. And of course, we continue to see that the rising tuna price to above 2,000 US dollars level has continued to put the pressure on both branded and the private label gross profit margin compared to the normalized margin level prior to year in the early of year 2016. In regard to frozen and chilled seafood, the sales has dipped a bit at negative 2.4% compared to last year. This is well in line with the fact that domestic shrimp price has declined 3% compared to last year, and salmon raw material prices also declined 7% from its peak during the third quarter year 2016. On the other hand, by the European salmon business has continued to show a positive gross profit margin for 4 consecutive quarters during the third quarter of this year, and the trend of the margin has continued to be stable and improving over the last 3 consecutive quarters. The last segment here is the pet care. The third quarter pet care and value added and others product sales has been increased by 3% compared to last year. Nonetheless, the gross profit margin has shown a decline compared to last year. These are mainly by the reclassification of cost structure, mainly on the sales of scraps, where now some of the cost allocation has been prescribed for the sales of scrap. While the pet care business profit margin has been also under the pressure due to the rising tuna raw material price during the year 2017 as well. In sum, with the 9 month sales of 101 billion Thai baht, we have reported the gross profit margin of 13.2% and the gross profit of 13.5% with the gross profit for the first 9 months of 8.9 billion Thai baht. And for that, I will pass the microphone back to Jörg to share with us about the company outlook and the prospect over the next coming events.
Okay, thank you, Best, for going through the details of the numbers. Now, what's key for us over the next months? We thought it's probably best to share with you some of our thoughts that we have in terms of what will be the focus of our work for the next coming months until year end and well into the new year. Number one, and I think given the raw material cost outlook and the gross margin situation, we have cost control, emphasis on continued cost control, initiatives and structural cost reduction will continue. We've presented Europe, our reorganization, and here the efforts to structurally reduce and take out cost elements. We are moving our US office together in the LA area between Chicken of the Sea and Chicken of the Sea Frozen to form one regional office, and there are, of course, efficiencies to be had. And you see our initiative with putting Stéphane Rey as the head of business services in Europe in place. The business services or shared services initiative is something you will hear a lot more over the next couple of quarters. The rollout of a unified SAP, global SAP infrastructure will help us to build here strong shared services and functional support in place at better cost. Plant productivity at a time when raw material cost is going up, I think the focus needs to increase on plant productivity. So we are putting in place a focused productivity program to close the gap in underperforming plants. You've already seen the cost measures that we've done in Ghana by downsizing here the facility. You've seen and we've shared with you the downsizing activities we had in our Georgia plant in the US, and we have a master plan to look at other activities where we are rationalizing activities in the plant footprint throughout our network. Excuse me. The third point is cost price recovery, to go in into more detailed discussions with our customers to see how we can adjust pricing for our products, especially also in Europe. In France, the discussions with retailers have started. People need to realize that if raw material cost increases by 40% year over year, it is impossible to leave shelf prices the same for a product. Companies need to transfer cost increases to customers and consumers, especially as some of the cost increases also come from sustainability efforts, where we are providing better and more sustainably sourced products to our clients and customers. On the flip side, we will prioritize investments into strongly growing businesses, emerging markets, especially China. I've presented you one example. We will accelerate commercialization of innovation. We will accelerate our food service initiative. You will soon hear about our food service initiative expanding into Europe. And we will also share more with you on our innovation rollout, our sliced tuna that we have launched a couple of weeks ago. And we will speed up our marine ingredients, a business that is the umbrella structure for our fish oil. The fish oil refinery in Germany is on its way. The oil extraction facility that we have here in Thailand, a new one, is very well underway, and we are building around this a very strong operational business organization with a new head of marine ingredients that we are hiring, where we bring in highly experienced executives to help us grow this business. Another point, of course, is deliver on the 3 key hypotheses around the Red Lobster investment. If you recall, 3 investment hypotheses that we had defined to identify the further path for Red Lobster. 1, the operational recovery to get back to 7-8% EBITDA within the operational business of Red Lobster. The increase of our supply program into Red Lobster to 200 million by the year 2020. And the return to growth for the Red Lobster brand, especially through international activities and international expansion. Emphasize on cash generation to drive deleveraging. We are still firm on feeling that 1 to 1.2 times net debt to equity is a good ratio, and we want to get back into that range as quick as possible. And we have set ourselves a target of the next 18 months to be back in a range of 1 to 1.2 net debt to equity. And of course, we will continue our full attention to the sea change program, to our sustainability, to our human rights, and to our environmental program that we have started for the company. So I'd like to close with this, the presentation part of this section, and I'm inviting everyone to pass your questions.
And that's sum up of the presentation slide for the third quarter, year 2017 result for Thai Union Group. Now I'd like to open for Q&A session for any inquiry that you may have. For any participants who have any inquiry, please type in the question box on your right or below the screen and click send. Okay, we will go through the question that has been sent in to us earlier, and we'll try to tackle each and every question here.
Okay, let me start with the first question. Of course, we talked about raw material cost. So the tuna price outlook is something that is of big concern. So if I look at this, we have to look at it really week by week, month by month. We see some very, very slight softening in October, November. Overall outlook still stays above 2,000. Maybe we are able to make some transactions below that level. We really hope prices can come down. It's relatively unsustainable to stay in this $2,000, $2,100 bracket. So we hope there can be some transactions that are closer to 1,800. Now, the long-term outlook, however, I think we have to be realistic. Prices are not going to drop to a 1,200, 1,300 level anytime soon. And we have to assume prices into Q1, Q2 next year may stay high. But of course, we do hope that catch rates improve, and we do hope that some of the strategic positioning of some of the fleets and the trade partners here is giving way to a more reasonable raw material price level. However, I think for the purpose of the analysis here, we should not expect a sharp decline in raw material price, but rather assume prices stay high. Salmon prices, of course, is the second part. They have come down. This is helping us in our overall gross margin, so there is some bottom line effect now. We've communicated before, we've moved from a pure spot market buying to a hedge strategy where we buy 50% spot market, 50% we are hedging the prices, so any drop in prices are of course also not immediately leading to improvements because half of the business is hedged. That's always the flip side. But I think in the end, it's a much less risky business as it is now. But we will see some improvement on the chilled salmon business in Europe going forward.
We have some question regarding the level of SG&A. So the reported SG&A is 9.5% of the NSV. These one include two main one-off items. The first one is a restructuring accrual we made regarding our Ghanaian factory for 80 million baht. And the second one is regarding also relocation costs, one-off, regarding our cozy company in the US. So these two leads to a SG&A as percentage of NSV, which is 9.1% after this one-off.
Question around the pet care and other segment. Why has there been such a significantly, excuse me, weaker margin? I think there are basically two reasons. One, we have changed our accounting treatment a little bit between what we call our byproducts business and the tuna business. Until now, the byproducts business did not have to pay for production scrap. So basically, every sales that the byproducts business did was based on a nearly 100% gross margin. That's, of course, not quite correct and accurate. So we've changed this accounting treatment, and we are now charging costs of goods sold to the added value and to the byproducts unit that's reported under pet care and other products. This helps the tuna, the main business in tuna, maintaining its margin, or at least upholding the margin a little bit better. But however, it takes away some of the favorable margin that we have in the pet care and others. The second part is we do see that in the pet care business, Q3 is a little bit challenged with lower margins. We see some challenges in the US from customers with substantial price negotiations. Some customers have gone away because they've discontinued product lines. So we are here a little bit challenged in the pet care segment. It's still great margins, which are very close to 20%. But yes, the pet care business also has dropped slightly in its gross margin contribution.
We have some questions regarding income tax. So we have at the end of Q3 a quite unusual situation with an income tax situation at the end of the quarter. This is mainly due to the situation at Red Lobster, where we were benefiting from tax credit, which were not expected, for an amount of 140 million baht. This is what we mentioned in page 29 of the documents. And this helped us to generate this quarter an income tax. As mentioned by Kunjorg a bit before, regarding income tax, we had this year a lot of changes happening, with a lot of decrease in tax rates in Europe, but also maybe in the US. So we follow this one very carefully to see what will be the effective tax rate for the end of 2017. And also for 2018, it's quite difficult for the time being to provide with any assumption on this one due to all these expected changes.
We have a question around the fishing fleet. Yes, we have completely sold the fishing fleet. There are still some expenses under discontinued operation. This is basically ramp down of the legal entities. There's some surviving cost in Ghana in our fleet company until it's completely closed down. In Ghana, there is a more complex entity law, legal entity law. So we will have still for a couple of months some smaller items under discontinued operations. There are some reasons behind this also in terms of the ability to use tax credits that we have in Ghana and potentially in France out of this. So this may still stay with us for a couple of quarters. The contribution in there is going to be very, very minor.
We have question regarding Red Lobster, and asking for an update regarding Red Lobster. So page 31 of the document, you have the details of the Red Lobster contribution at the end of Q3. So you can see that in Q3, Red Lobster generated a loss, small loss in Q3, the same that in Q2, after a huge gain in Q1. So at the end of the day, bottom line, the main impact is coming from the other income plus the income tax that they are generating over this quarter. As we were saying a bit before, we had this quarter a one-off regarding tax from Red Lobster due to unexpected tax savings on this one. And in the tax, we have a small impact coming from the Red Lobster tax loss, but it's a very small amount.
There's a question around our gross profit margin target in 2018. I think we will at some stage early next year share with you our guidance for 2018. Please keep in mind what we are sharing with you regarding our raw material price projections on tuna. I think we need to be realistic going into 2018. We are currently in the process to set up our bottom-up budget, and we will share more with you on our guidance for 2018 a little bit earlier next year. Cost pass-through to customer prices. I think this is one of the key initiatives that we are running this year and now going into the end of the year, starting next year. Negotiations have started with several retailers in Europe. We will also see here in Thailand, also in the US, price changes. Of course, the objective is to pass all our costs through to the markets, and in some areas I would hope that clients and customers, they recognize our efforts in sustainability, on human rights, our commitments that we have made, and that the products we are selling are better products, are more sustainably sourced, and are overall more responsible products, and compensate us for the efforts and the activities and the strategy we have to change the industry. Guidance is a question on guidance on tax rate. Again, same thing. We will come out with guidance for 18 a little bit later this year or early next year. But again, I think on tax, we should not assume that one-time savings that are being recorded can be in any shape or form recurring positive effects. These are one-time effects that help us, but I think at one stage tax rates will return back to normal.
We have a bit more time here. For any participant who has any inquiry, please type into the question box on the screen and click send. We'll try to respond to your inquiry as they come in. Thank you very much. We'll wait for a few more minutes here.
Bangkok, just a quick reminder, we are meeting tomorrow at the Sheraton Grand in Sukhumvit for our Q3 analyst presentation.
All right, since there is no further question from the floor, so this concludes the live webcast for the Thai Union Group third quarter year 2017 result announcement today. Thank you very much, Khun Yok Iris, Group CFO, and thank you, Mr. Ludo Garnier, and thank you everyone for your time and interest in participating in the event today. Should you have any further questions, please feel free to contact our AR department anytime during the office hours. I wish you have a good day, and thank you very much.
Thanks a lot. Have a good day and good night.
Thank you. Goodbye.